Today, I thought we'd look at one of the most popular ETFs out there, SCHD by Schwab, the Schwab US Dividend Equity ETF. We've done this video before reviewing SCHD, but today I want to look at how much dividends we would have in a number of years, maybe 10, 15, 20 years, if we were to invest a certain amount into this ETF, almost projecting into the future. So this is one of the most popular ETF out there. It has about $47 billion in assets under management. Inception date October of 2011. So about 12, 13 years now. The expense ratio is very low, 0.06. So that's going to be about $6 for every $10,000 invested. There's about 100 holdings in there. It pays quarterly distribution. Now let's look at a few other metrics of the SCHD. So right now it's trading at about $71 a share. The 52-week low is about $66. The 52-week high is about $79. So toward the lower end. It pays quarterly dividend, like we said. The dividend rate for the trailing 12 months is about $2.62 annually. So that works out to be about 65 cents per share. Let's look at some of the holdings. Look at the sector first. So it had about 18% industrial, 15, almost 16% financial, and about 16% healthcare. Consumer defensive is about 12.75%. Technology is about 12%. So much lower in technology, at about 12% than the S&P 500, which is about 30% technology. Consumer cyclical, 9%, energy 9%, and then communications, basic materials and utilities in the mid to low single digits. Top 10 holdings include Broadcom, 4.5%, Amgen, which is a biotech company, Verizon, Coca-Cola, Pepsi, Merck, AbbVie, the Home Depot, Texas Instruments, BlackRock. So you see the top 10 holdings represent about 40%. Okay, so let us look at the dividend calculator. Before we look at the dividend calculator, let's look at the dividends, because that's going to be a key. Let's look at the dividend yield. So right now, it's been about 3.68% dividend yield. That's a trailing 12 months, about 3.68% dividend. The dividend growth rate. So about 3.68% with the dividend yield for the trailing 12 months. The three-year compounded annual growth rate of the dividend, about 13%. So this is one of the things that people love about SCHD. It grows its dividend very well, double digits. The 5-year compound annual growth rate of the dividend, 13%. The 10-year compound annual growth rate of the dividend, 11.11%. So you see that it has grown its dividend very well. Now let's go to our dividend calculator. So now this will be a little fun. Let's kind of anticipate. Investment type here, we'll put in individual stock. Even though it's an ETF, we'll put an individual stock. Now, distribution frequency, we said it pays quarterly. SCHD pays quarterly. And the DRIP stands for Dividend Reinvestment Plan. We're going to reinvest our dividends, okay, over this time period. So yes, we'll leave it on. Number of shares. This is what we're starting with. So we said SCHD right now is about $70 or so. Number of shares. Let's start off with zero. Let's start off with zero number of shares. Yeah, let's start off with zero number of shares. Okay. The share price, we said the share price was, let's take a quick look at it. The share price right now we said was 71.14. So let's say the share price is $71.14. I don't know if it'll let me do 40 cents, but okay, $71.14. Annual contribution. So even though you may invest monthly, you have to put in an annual contribution. Let's say we're doing $100 per month. So annual contribution would be $1,200. So we're gonna make this $1,200 annually. So this is just $100 per month. Okay. The dividend tax rate. What do they give us here? They give us the option. They give us here is we'll make it 15%. Let's make it 15%. ETFs are taxed, such as the SCHD. I believe SCHD is taxed. There's no real estate in SCHD. I don't believe there's no real estate in SCHD. So it's going to be a qualified dividend. So, and it's also all U.S. companies, so it should be qualified. So we'll do 15%. Tax exempt dividend income allowed rate with a zero. Initial dividend yield, we said the initial dividend yield is about 3.68%. So we're starting off with 3.68%. The expected annual dividend amount increase per year. How much do you expect your dividends to increase annually? We said the 10-year CAGR. The 10-year dividend CAGR was, no, the 10-year dividend CAGR was 11.11. Or it might, let's look so I don't make this up. Let's look so I don't make this up. The dividend scorecard. Let's see here. They had dividend growth rate for the 10-year was 11.11. So let's use 11%. All right. If they're able to grow their dividend annually at that double digit, let's use 11%. Let's use 11%. Expected annual dividend amount increase. So we're going to use 11%. Let's use it. Whether they can keep that up, but we'll put 11%. Expected annual share price appreciation. The expected annual share price appreciation, because SCHD has been growing its share price as well. Let's look at SCHD. We see here the inception is October 2011. Since inception, it has returned 12.53%. Whether that's going to continue, don't know. But let's use 12.53. So let's go back and we'll put 12 expected annual share price appreciation. We're going to put 12. We'll put 12%. Years invested. We can go to 5. We can do 5 years. See what we'll have at 5 years. We'll do calculate dividends. This is after 5 years. So if we're doing $100 a month, it'd be $1,200 a year for 5 years in SCHD. Assuming everything remains the same, the growth rate and so on. we would have about $8,000 ending balance. Our annual dividend income would be about $280. Nothing to write home about. I agree. Annual dividend income 288. The total dividend payment over 5 years would be about $500 over 5 years. Not great. Yield on cost 4.5%. The chart will give us here is very small. So year one we started with nothing, zero owned. $1,200 was what we invested. The year end shares owned, we owned 15 shares at the end of the year. And this is how much the stock price would go up, because we said it's going to go up about 12% per year. And it does the same thing year 2 through 5. And you see the annual contribution is the same amount, $100 a month or $1,200 for the year. So you see dividends, annual dividend, not that great. Now we're going to move forward, and we're going to go forward to let's see what this looks like after 10 years. After 10 years now, we see in year 6 annual dividend $285. Year 7 annual dividend $366. Year 10 annual dividend is still only $684. So not really doing the job in terms of what to live on. We can go to year 20, but you see that we're only doing $100 a month. So let's go to year 20 and see. So with $100 a month, after 20 years, we are having an annual dividend $3,000. So not too great. But the new balance, meaning the value of our portfolio, is worth $120,000. Now let's try to crank this up. Okay, so instead of $100 a month or $1,200 a year, let's do $500 every month. $500 a month times 12 months is going to be $6,000 a year. So let's go up to $6,000 annual contribution. $6,000 annual contribution. So that's $500 a month. Now let's look where we are now after 20 years. With $600, with $500 a month, or $6,000 a year, annual dividend. After year 5, we have $1,000 annual dividend because we're putting a little more money. After 10 years, we have $3,000 in annual dividend. Okay. After 15 years, we have $7,000 in annual dividend. And after 20 years, we have $16,000 in annual dividend. Okay? Which is not bad. That's not a bad supplemental income. And the portfolio value would be valued at about $600,000. Right? So $500,000 a month for 20 years. The portfolio value is $600,000, and we're getting some dividend of $16,000. That's not bad. Let's put it up to $1,000 a month. Now, right? Let's put up to $1,000 a month, and we'll see what that looks like. So $1,000 a month would be $12,000 every year. If you can do $1,000 a month, it would be $12,000 a year. After 20 years, let's see what we're looking at. Again, we see the portfolio value after 20 years is going to be $1.2 million. The annual dividend income is going to be about $37,000 a year in annual dividend income. That's not bad. And over the 20 years, you would have gotten over $200,000 in dividends. Okay, so it's not bad. That'll be about $500 every month. You know, you see the numbers a little faster. After 5 years, with $500 a month, Correct. Now this is $1,000 a month. This is $1,000 a month. $1,000 a month. After 5 years, you're getting $2,000 in annual dividends. After 10 years, you're getting $7,000, almost $7,000 annually. 15 years, you're getting $15,000 annually in dividends. And after 20 years, you're getting about $32,000 in annual dividends. And your portfolio value is going to be $1.2 million, right? And so you're going to say, well, you can get $1,000. Well, when you begin to get motivated and you begin to, look at where you can cut costs, and you're really intentional, and you are motivated, you really can find ways that you can cut costs, and you just become very intentional. So again, just showing you something that is very possible. Like something like this is very, very possible. You're doing overtime and you're not wasting the money, and you're really keeping your expenses down. This is very possible. Um, let's do one more, and then we will end it. Let's do $2,000 a month. So that'll be $24,000 a year. $24,000 a year. And remember, I put this with a dividend tax rate of 15%. So imagine if you had a portion of this in your Roth IRA, where it'd be tax free. That'd be awesome, right? So here we're doing $2,000 every month, right? Annual contribution 24,000. Annual contribution 24,000, right? After 5 years, you're getting $4,000 in dividends. After 10 years, you're getting $13,000 in dividends. After 15 years, you're getting 31,000 in dividends. And after 20 years, you're getting 64,000 in dividends. That's pretty much $5,000 a month in dividends, and your portfolio value would have grown to almost $2.5 million. So these numbers get very exciting when you become very deliberate and intentional. And even if you can't do this, whatever you can do to set up your future, your older self will thank you very much. So the MD Investor Guys coming out with another video that's trying to have us future cast or project into the future what we would have. Until next time, continue to educate yourself and teach your children so we can break the cycle of generational poverty. MD Investor out.